Good morning, everybody. It's Monday, May 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, July corn up 5 1/4 at 4.55. July soybeans are up 17 1/2 at 10.69 1/4, and July Chicago wheat was down 1/4 at 5.21 1/2. This morning we had an export sales announcement of 120,000 metric tons of soybeans to Mexico. 24,000 of that total was for 24, with 96,000 for 25. We'll jump right in here this morning. A lot to get to. Obviously, big headlines there yesterday with China agreeing to a 90-day reduction in tariffs, 30%. U.S. is going from 145 to 30%. China's going from 125 to 10. And I know there was something along the lines of 20% on fentanyl. That would stay on the board there. We've got the USDA report here, 11 o'clock Central. So we'll talk a little bit about that here this morning. India, Pakistan ceasefire. So, I mean, just headlines all over the place. So, Justin, maybe a few thoughts, I guess, on your mind this morning with everything that's come out, and then we'll throw around the room.
Yeah, I mean, obviously a lot to digest, like you said. I think the most encouraging thing is that, the rhetoric coming from China kind of matches what we're saying. I think that's why we're seeing, Dow's up over 1,000, Nasdaq's up 800, S&P's up 170. They were kind of taking back most or even more of the break that we did have from, Liberation Day. So I think it's really hard to be just a big grain bear here as well. I think that the chance of some good agreements coming this way, I think we factored in a lot of negative stuff in our markets. The fact that we got it planted, I think like we talked about last week, probably put the cart before the horse on how bearish everything is. I think you're kind of putting your head in the sand if you're just a flat out bear here. With the time of year and kind of the weather that we have to go through still, and all these trade deals, the next 90 days are gonna be really interesting on what happens. Obviously there's a lot of other countries in the mix too, that we'll see coming out, that I was excited about without China, and now the fact that the talks went much better than I had anticipated for sure, makes me pretty friendly here, to be honest with you.
Do you think it probably highlights that just the position China was in, right? They dug in rhetorically for quite a while, but at the end of the day, we knew we were putting the screws to them pretty hard.
Yeah, and at the end of the day, like also, what is the goal here? I mean, you have two big superpowers. I mean, it was unsustainable, probably the relationship that we had. I don't think anybody wants to go to a world war over some tariffs and things like that. So it'll be really interesting just to see, like, what does this all look like? China's obviously got superior manufacturing, and there's a lot of products. There's some I'm hoping we walk back and figure out things that are of high national security to us that we have to onshore. Somewhere in the middle, right? That's I think that's kind of Trump's thing, right? You throw something so ridiculous out and panics everybody, but we're really trying to get the needle moved to here, right? So you're hoping that that's kind of what ends up here. Well, we'll see. I mean, this is a very good first step for sure.
I guess lost in the headlines is we're going to get new crop balance sheets for the first time here at 11 o'clock. Justin, what do you got for us on that side?
Yeah, I mean, I think Dustin has done a good job in the letter. I mean, you just kind of have to take at face value what planning intentions were. We kind of know what they like to use for trend line yield. The difference will be what the demand side of the equation looks like, in my opinion. What do they factor in for exports? What do they factor in for South American crop sizes? That'll be the part that is unknown. I think if you're expecting a change to acres or yield from trend, you're probably kidding yourself. It's really gonna be on the demand side. That's gonna move the needle on the ending stocks. Again, we'll probably have over a 2 billion carryout. We'll have a bearish print, but we've more than traded that, I think, at this point. And it's going to be both corn and beans are going to be numbers that we've never seen before, that we've never actually produced on the yield side. So, it is their equation that they use for trend, but I think there's a lot of questioning, rightfully so, on is that the current trend that we're on still? We haven't hit those numbers for years, even with some pretty good weather. So that's kind of question, I think to go just use that number, I think the market's going to probably want to put some risk premium back in the market unless weather is perfect to hit those kind of numbers. Not that we can't exceed them. We could have a 2004, 2014 type year where it's just perfect weather all the way through and you're 5, 6, 7% above trend, but we just haven't seen that in a long time.
Ben, what's on your mind as we start the week? You're muted.
It seems like a lot of things to juggle this morning. Everyone's excited this morning about the trade deal with good reason. I think Justin touched on it. It's much more positive than anticipated. But we got a report today, and looking at that is see what they can do to adjust any old crop demand numbers. And I would not be shocked to see them lower feed a little bit. You take those things, and then we're in that kind of uncertainty period of what things look like 4 to 7 weeks out. So I agree. I don't know that you want to really pile drive corn here. We found some more demand on the break. And I think that the macro picture, especially if you look across various markets this morning, it looks and feels healthier. So, some of these things can go our way and be supportive grain. Some of us can go against them, but we don't want to be in a situation where all of a sudden trade deals break down, weather changes, safrinha corn starts to drip into the market a little bit more, and we lose some of that demand base. So overnight, in the last 24 hours, we've had some things that have kind of gone our way. So hopefully we continue to do that. We're a long ways from making a crop here.
Sure. Dustin,
things look good technically to me with a good close.
Yeah, no, absolutely, Ben. Dustin, what are you thinking here as we start the week?
Yeah, I think there's a lot of bearishness going into U.S.-China talks, that we were gonna, fight till the bitter end. And so first signs of positive information. It's not surprising to see, beans up 20 cents. We're also kind of on a breakout. We're breaking above some major moving averages in the new crop that we haven't had in a while. We're on a breakout in the ratio of beans divided by corn. So a lot of things are kind of coming about technically at the same time. How many people have been ultra bearish because of Trump, right? And that have maybe sold a little bit more or even spec short in some cases because of it. If Besant is talking about the potential for, trade or for grain purchases as part of the initial agreement, kind of like phase one trade deal, I think what's maybe a little bit different around this time with an announcement like that, if it were to come about, is that we actually kind of precedence that China has followed through with it. I think in 2020, when it was first announced, we're going into, a lot of skepticism about that, whether China would actually follow through with it, especially with, Trump's kind of end of his term there and COVID. And then they ended up, buying, 26 million metric tons of corn that year, right? But when the prior high that they had ever purchased was 7 or 8 million. So I think that this time around, if we were actually to see them announce that, the market would take it a lot more serious, a lot quicker. If we get to that point, right? Which it seems like the market should be pricing in after this weekend. So I'm very excited to see it. Hopefully there's some really good things that come out of it. Still very cautious about this whole thing. I don't want to just go bet the farm that it's just going to be a bull market from this. But I'm, like I said, very excited to see it.
Yeah, to that point, Dustin, when that happened, when they bought 27 to 30 million tons multi crops, the market poo-pooed it for months. Even to the point where I think they had something, I'm not gonna get the exact number right, like the first 15 million tons that they had purchased, the USDA was still writing down 8.
Mm.
Yeah, they were
for the whole year. They had already had 15 on the books. So that was how a little belief that people had in it. I remember sitting there what are we doing? They would just sell corn market every day we kept announcing it. And it was just like, oh, well, they're just going to cancel it all. And, then obviously duratio happened, and then we blamed everything on duratio for the bull market. But a lot of things happened that we just, I think just the negative sentiment that so many people have towards Trump, I think, kind of poo-poo any kind of a trade deal right now.
Yeah.
Take on
it. Well, that's it'll be interesting to see here, guys. Like I said, we're going to be glued to headlines. We will have a report out at 11 o'clock. We're going to take a look there, and then we'll be back with bonus war room at 11:15 Central to go through the numbers and give some initial impressions and thoughts there. Rylan, let's quickly move over to livestock here. Also a big weekend for news with the Mexico U.S. border closures. Reading through the announcement more so on a monthly basis as they continue to monitor the migration of screw worm moving north. So that'll be interesting to see. And then, I think it goes without saying the hog market's going to be, pretty directly linked here with China. So what do you got for us to start the week?
Yeah, absolutely. I think just, with obviously prices made new contract highs across the board, pretty much in the deferred contracts in cattle last week. And then you get this on top of it. And we've said this before, this just exacerbates the tight supply problem. I mean, even the futures look like they're cautious here, whereas the auction markets around the country are just exploding. And as we said last week, it just seems like they're parabolic. There's a price that it's just a mad dash for cattle right now, and this is just going to be another problem. So I definitely expect this to kind of have much higher impact on the futures maybe this time around, but it is month to month. Obviously they're not trying to spook the market that month. They're going to reassess these things. But as we just saw, we were starting to pick up that volume from Mexico with feeder imports just on the March report. It just started to kind of pick up after pretty much writing zero for the prior two. And now we're going to have to rely on Canada a lot to fill that void, I think, from an import standpoint. So, it's definitely going to be read, I think, is bullish. And we do have a roll going on right now. So it does feel like there's still going to be a lot of moving parts to this. I don't think it's just a layup that we're just going to go, parabolic into perpetuity. Obviously, there's going to be some resistance at some point. But, I mean, obviously, the news is really good. It's we'll take it, in 30-day strides from what it looks like. But yeah, like on the live side of the market, cash prices were up again. I mean, we were seeing Nebraska trade at 355 dressed. Some heifers were going in Kansas for 219 to 226. So overall, cash is averaging right around 225-ish, and that's up about $4 or $5 from last week, and just no real end in sight right now. So overall, we did see a little bit of a downtick in open interest, but maybe that's just from the roll, maybe some profit taking kind of late in the week. So there's not really much resistance we've seen yet, and it looks like Packers really kind of slowing down beef production hasn't quite pulled up the beef prices I think that most were expecting. But on the other hand, that could start to pick up if this lasts, I think you'd pick up beef prices pretty good here. So overall, just good news all around on the cattle side of things. And yeah, the hog market is most likely going to focus a lot on the headline deals. If there's any purchase agreements, I think this is what the market's going to be looking for. If there's any kind of dollar figure attached to any of this, but just the sentiment alone, we know managed money still holding pretty hefty long positions in the meats. And we are seeing those commitments start to rise a little bit, and we are in the midst of the roll. It's just the product market has been very flat. Cash market's picking up a little bit. Seasonally, we'd expect this right now, but maybe this helps bring those prices up to some degree. So we'll see what the reaction is, but everything, if I had to bet on it this morning, I'd expect green kind of right out of the gate in a pretty big way.
Very good. Appreciate the update there. Justin, I did have a conversation with the grower of the weekend, and I wanted to ask you, with, let's say, some dynamics change here. We get, purchase agreements, whatever deals with China. You've seen, corn bean ratio, obviously what it's done the last, 2-3 weeks. But are we pretty much locked in your opinion, with the acreage that we've got? I mean, would you see a migration towards beans if things really got cooking here?
Yeah, I'd say we're pretty much locked in. I mean, you could see some switching, probably more calendar year, or the calendar rolling around where you're kind of getting late on corn, where you might switch to more beans. I would say we're mostly locked in, especially with the quick planting pace that we had in the heart of the belt. Now, maybe on the fringes, if people didn't buy fertilizer on some acres just because those prices did get pretty high, if they didn't buy that, or seed was too high, or they had trouble with financing at the bank and they couldn't get the total dollars. Some of those things could help switch. So yeah, we could see a little bit, but I wouldn't expect it to be a major shift.
Okay, very good. Just came in to the open here. We got July corn up 4.5 right now, 454 1/4. July soybeans are up 15 1/4 at 1067, and July Chicago wheat's up 1/2 at 522. Again, USDA report will be out at 11 o'clock Central. We'll be back with a bonus War Room show at 11:15 Central, so be sure to tune in. We'll have our thoughts and reactions to this morning's report. Also, this afternoon, crop progress will be out at 3 o'clock Central. We'll take a look there, talk about that in tomorrow morning's War Room. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again at 11:15 with our report reactions. Talk to you then.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.